Another beautiful day trading. It's a sweet mark. Today I found a sweet mark. I feel I found the sweet mark because I need to risk. There's no. If you fear something, there's no dreams. So I think the right risk for a single contract ought to be 450 to 500. 450. So you should be willing to risk $500 to make at least 100 at the current rate of volatility within what you're trying to trade. So what I'm doing, I think, is the best idea so far. It's the new thing. I'm always tinkering with the details in the ways I should do things. Before I was like right ITM, maybe like $1 strike off the money. But now I'm going just deep in the money by like a factor of like 5 strikes or $5. So if it's like 43, just even 45. If it's 39, it's even, regardless of direction, 5 more on the flat. Every 5, just like Wilbur did it. But I'm just one contract and deep in the money. So I think I think what I'm doing right now is definitely going to be, it's the right thing, obviously with a stop loss. So if you don't make 100, you lose 100. You set the stop loss at 100 because it takes a substantial stock market move to lose the 100. It's a big one. It's not really that. It's not that easy to lose to 100 and then you're moving it up. So we'll see what happens tomorrow. It's highly likely I'm going to lose $100 on this. I'm pretty sure I'm going to be stopped out between today and tomorrow. But we'll have to see. Have to see how SPY does AM. I've never seen so far SPY dunk in the at pregame and overnight. If it dunks, it's right after in the morning. I've never seen SPY, unless there's news. SPY usually doesn't close and then dunk below current price levels. Right there. It's always like, if there is a big sell, it might be substantially big enough for a stop loss, but it always bounces back. And obviously the stop loss is not going to be hit if it's aftermarket. It will stay in play. Currently, I'm still in play, so that's all that matters. But I think that should be it. I think 450 for 5 strikes for $3 above, $3 to $4 above the current stock price should be the right number for getting a single options contract. Why? Because it has the right balance of earning and loss. If you go too low delta, no moves create nothing at all. Even if it moves little, creates nothing at all. So if you want to be consistent, if the issue is consistency and moving like if you actually bought stock, delta has to be at least 40 deltas. So right now I currently have 40 deltas on one single contract, and the one for the 28 has 50 deltas. 50 deltas and a little more. And we'll see what happens. I gotta be, the current strategy for tomorrow is either I'm stopped out, I close the option in profit tomorrow, or close everything else, depending on what happens, close everything else, or stop loss at 100 and another long trade opening tomorrow beyond the stop loss, 50% below the opening range. 50% expansion below the lowest at 9:30 a.m. range. So I'm still like, it's still the same thing that I was doing. Continue buying if the price, if the first trade is negative, but rather more controlled and way more delta. You know, it's just one contract, even with more delta at the bottom. I don't know. Hopefully it works, because I definitely have a lot of money for that. But I would like to have, if I'm gonna start options trading, I currently have, like, my port's not that big. My port's like 1,000. So I gotta increase my port to at least 2,000, and then do one contract, because I'm safe with that. I could put $500 on the line, because I know what $500 on the line is gonna do. Like, it has to move a lot to lose $100. You understand what's happening? It's not like when you buy 10 contracts or 5 contracts that the price moves ever so slightly down, and it's bleeding red. You know, it takes substantial. You know, it's a really small bracket of movement, considering SPY, for example. It's not a lot, maybe like $1.50 or $2 or more than $1, because I'm pretty sure the range I'm in right now, from where I got it in the middle, it's at least like $2 and 30 something odd cents difference. But you know, it has to drop a lot to lose $100. It's expensive, but you have more room to stop it. You know, if it's going to attempt to liquidate your port, you have a lot of time to look at that work. $20, $40, $60. I saw today 160, 160, 75, 180, $200. I saw that $200 and I was hooked already. You know, spend $450, make $200. You know, put to the test $450, make $200, and that's at extreme. That's if you're really success. You know, that's if what you traded was successful. I could have closed it today, but I'm looking for more than $200, as it is a 24-hour trade. You know, 1 DTE instead of 0, because 0 is too wild. 0, there's not like a runner. You know, we can't hope for things to get better in 24 hours. Although it also increases risk, but it might decrease risk, because tomorrow's another day. I still got hope the next day. And SPY trades on such a short range. You know, it's like SPY trades in 5 to 10 increments. You know, SPY's not trading 30 points. It wish it trades 30 points. SPY has a range of like ATR of like 4. I haven't checked ATR, but it's like 4 something, 3.5, $3.50. It's such a small range that what I'm doing is the correct thing. Yes, you gotta risk $450. Deep in the money, single contract, and that's it. Just open it, look at it. Made $60. Okay, close it. You know, that's it. But how I wanna maximize my earnings, so I leave it 24 hours. You know. But that's the correct chef's kiss. You gotta put $450 on the line to make $60, because anything else is way too risky. You know, anything else moves at an income pace so fast that you wouldn't be able to control it. So it's best to increase delta than increase contract size. I didn't see red at all. I saw like negative $6 on that, and I put $450 on the line. I could wipe my ass with $6. Do you understand? Fucking $6 is throw away daily money. Do whatever the fuck I want with it. I make that in 2 hours and a half, an hour and a half a day, or whatever. And like I said, I'm like the magician. I only make $10 a day. How I spend $500, I don't know, but that's the logic in this life. You gotta be different. I'm a little different with it. I learned late, after becoming a doctor, that I could have done that. I could have probably been spending $500 when I was like 32. Like that, like 32, 30. I probably could have been doing it. I don't know. Probably could have been doing it, but I didn't. I was too afraid then. I was like, I got this money. I don't want to spend this money. I'm afraid. I'm a little bitch. I don't want to touch this shit. I'm going to go poor if I do. You know, poor people thoughts in their mind, and I'm like spending $500 like bang. $500, fuck it. How much I made $300. Why am I spending $200 more? That's life, man. That's how you That's how you start figuring out that you're adulting. That's the term. The term is adulting. I could have been doing it 8 years prior, but that's all right. I'm 40 years old now, 39, so that's the idea. All right, I'm gonna see you guys later. I'm gonna watch some TikTok, relax. I already ate again some Amazon Go. No chicken nuggets. Again, the shit was empty. I got a vanilla Coke, the same fucking turkey bacon wrap as yesterday, and the same bag of Ruffles. Basically, the same dinner all over again. No change. Tonight, I might have the Cherry Garcia. We might be having sweets tonight. Definitely having sweets tonight, baby. All right, peace.